Good evening, everyone. I am live right now. I believe you all can see me. And I hope the audio is also clear. Please confirm and let me know. Okay. We'll start off in 1 minute. Let others also join in. Yes. Good evening, everyone. Good evening, Venkatesh, Swapna Rakesh, Vijayalakshmi. Good evening, everyone. So today we are going to discuss on modern business environment. Shall we start off now, friends? I think everyone has joined in. Let us start off now. So friends, as I told you, every week we are covering one chapter of SCMPE. We are doing a 1 hour marathon revision in which we cover all the concepts and the logic boosters of each and every chapter, so that for you can study these chapters and you can score good marks in the upcoming examination. We have already covered some chapters. What are the chapters that we have covered so far? If I'm not wrong, we have covered lean systems, which was a high priority chapter. We could score maximum marks over here. Then we covered strategic analysis. Today we are covering modern business environment. Next class we will be covering cost management techniques. Why we are going in this order is because each of this chapter you are going to score more marks every hour that you spend on these chapters. So from exam perspective, you can get a better mileage. If you want to view the previous classes, they are already available either in the YouTube itself, or you can visit my platform where we have arranged it. The platform name is class.tarunjagdish.com. All right. So that is the platform name. You can just register here. I will be adding you to the batch. I'll just show you how this works. If you go on class.tarunjagdish.com, there is a batch called as SCMPE Success Series. Here, if you click on videos, all the past classes videos are available over here. So we have done with SCMPE plan, we have done with lean system, we have done with strategic analysis, and we have made a study plan also for May examination or November 23 examination. So you can go through the study plan, you will get a fair idea about how you can take these things forward. All right, friends. I will now start off. So we will start with modern business environment. Friends, all my PPT, SCMPE, case study PPTs are there, theory PPTs are there. Everything is available in my website. I'll tell you where to find them. Go to tarunjagdish.com, my main page, and just click on notes. The moment you click on notes, you get all the notes over there. And if you want to learn case studies, just click over here in SCMPE case studies. If you want a full 16-hour concept revision in one shot, you can click on SCMPE refresher course. All right, friends, I'm clicking on notes now. I will take SCMPE theory PPT. Inside this, we'll take the study material theory and we will do modern business environment. This is the chapter for today. All right. So let me start with the presentation now. Hold on. Yes. So shall we start off now, friends? All right. First thing that we have to learn over here is called as the cost of quality. There are two types of cost of good quality, and then you have cost of bad quality. I can explain this to you with the help of a very simple example. Tell me, my dear friends, what is the plan that you what are you planning to have for your dinner today? Let us assume you are going to one of your favorite restaurant and assume you are a person who likes South Indian food. Let us assume you are going to go and have a nice quality masala dosa from your favorite restaurant. Now, you can either make a good masala dosa or you can make a bad masala dosa. Okay. Whether you make a good masala dosa or bad masala dosa, both are having their own cost involved over there. This good masala dosa cost is what we call it as cost of good quality. Whereas bad masala dosa is what we call it as cost of bad quality. Tell me friends, if you make a bad masala dosa, what are the type of cost that you will incur on that friends? There are ideally two types of cost that they have told over here. One is called as internal failure cost and the other one is called as external failure cost. So let me explain to you the meaning of these words internal failure and external failure. And simple example of internal failure cost is I make a burnt masala dosa or I overcook my masala dosa. So when you do an overcook, can you give it to the customer? No. So you will not give to customer. If you don't give something to customer, that is what we call it as internal failure cost. Everybody clear with that part? Whereas external failure cost means what? You tell me now. It means I give masala dosa to customer. Okay, customer eats. When he eats, he realizes there is no salt in the masala dosa. Now what will he do? He will get up and leave the restaurant. This is an example of external failure cost. I hope you are clear so far. Can you quickly scribble down this in your books? Wait, I think you cannot see the entire screen behind me, is it? Now you should be able to view it. Come on, quickly scribble it down. I'll go to the next part now. Yes. Fine, friends. So I believe we are all done with this. I'll go to the next part now. So that is what you call it as cost of good quality, cost of bad quality. We have covered cost of bad quality. Now what are we supposed to cover? Cost of good quality. So friends, if you want to make a good masala dosa, even there you have a cost involved. There are two types of cost involved over here. One is called as prevention cost and the other one is called as appraisal cost. Now prevention cost is, for example, I buy only high quality potatoes from a genuine vendor. Okay, so now if you buy from a very nice and genuine vendor, one thing is for sure, the quality of potato will always be good. So therefore, quality of masala dosa also will be very good. Whereas appraisal cost means once you make an masala dosa, let me give an example of this called as the inspection cost. Alright. So what happens in case of inspection cost? Once the masala dosa is ready, one fellow will take a bite of masala dosa and he will tell, okay, this is good, give it to the customer. If the taste is not good, don't give to the customer. So these are the costs involved for making good masala dosa, and this is what we call it as the cost of good quality. Alright, can you write down this or scribble down this in your books now? Fine, friends. Can I go to the next part now? So we are done with cost of good quality and cost of bad quality. Let us go. They have given some examples over here. Internal failure cost, defect in production, retesting of the product, internal failure is happening. External failure, one example is what? Sales return, appraisal cost, auditing and testing, preventive cost, as I told you, buying from some genuine vendors. All right. Now, friends, the whole thing can also be called in a different model, which is called as the PAF model. Prevention, appraisal, failure model. Tell me, friends, what do you mean by prevention and appraisal? Those two things are nothing but they are, 1 minute, let me see if I can write over here. Okay, prevention and appraisal together is nothing but cost of good quality. Failure is cost of bad quality. There you have internal failure cost and you have external failure cost. Can you scribble down this in your books now? All right. Fine, friends. Next thing is called as total quality management. Tata Steels has implemented this thing called as TQM, total quality management. Friends, what they say is in this you will make sure that the product quality is unbeatable. That is what we are going to do over here. All right, but for that, practically every company does it separately. Every company has got their own strategy. For your CA final, you can learn this by way of theory. All right, so here they have given the theory: continuous improvement, integrate different function, finance, sales, etc. They will use ERP, ensure that things are done right the first time itself, remove waste and efficiency, emphasize on teamwork, blah blah blah. So basically, make sure that you're doing your things properly and in the best quality. When you do like this, one thing what happens is that initially your cost goes up. But they say in the long run, your cost will come down. Are you all clear with this part, friends? Okay. Can you scribble down this in your books or just make some short notes? All right, friends, I'll go to the next part now. Okay. Next, they have taught there are 6 C's of TQM. This again is theory that you have to learn. Commitment. They should have wonderful commitment. Culture. Very good culture in the organization. Continuous improvement. Cooperation among the people. Customer focus and control. These are the 6 C's. So again, theory part, friends, you have to learn it conceptually. You have to by heart. Keep one thing in your mind, a simple way of learning. This one is the only one which is CU, culture. Rest everything is CO, commitment, control, customer, sorry. 2 CUs are there and the remaining 4 are CO, cooperation, continuous improvement. Alright, friends. I'll go to the next part now. Next, they call it as a cycle called as PDCA cycle. It is not written over here. I will maybe mention that over here. PDCA cycle. They say first you plan your activities. After planning, you do your activity. After doing, you check whether you're doing it correctly. And then what you have to do? Again, check and act to correct it. That cycle is what you call it as PDCA cycle. First you plan. After planning, you, let's say for example, this is applicable for everything, even for your CA exam. You will plan your study. I will study this many hours per day. Then let's say you will tell that I will study 10 hours per day. You will actually start studying. But when you actually start studying, you will be studying only for, let us say, 7 hours. Now, when you check how much is the deviation that you get over here, 3-hour deviation. Then you will find the reason why is the 3-hour deviation. Then you will tell I am checking my WhatsApp too many times. So what is the corrective action you will take over here? Stop using WhatsApp and again start working on it. Are you clear with the whole thing? This is what you call it as the PDCA cycle. Everybody clear with this part? Can you quickly draw this diagram in your books? Done, friends. Can I go to the next part now? All right. So once you're done with PDCA, we'll go to the next one. There are various models, and one of the models that you have to learn is called as business excellence model. Friends, in this model of business excellence model, they basically say you have 4 results and you have 5 enablers. It is much easier for me to explain this to you with the help of a video. Okay. So friends, I'll show you that video. It's already available in my YouTube channel. Let me just minimize this. All right. If you take my YouTube channel, all right, if you click on playlist, you have SCMPE case studies videos. Friends, those videos are very, very useful because normally if you go through the textbooks, you have to learn the entire case study. It will take you around 40-45 minutes. These videos are crisp. They are after making short notes from the case studies. And what we have done, I have taken every video, compressing the entire thing in 5 minutes time. All right. So here I'll show you business excellence model. This is business excellence model. I'll play the video now. Hold on.
Now in this video, we will learn another wonderful model which is used globally, which is called as the business excellence model. Friends, business excellence model is created by studying the same nature of business across the world and then coming up with some models which are the best practices which are happening in the industry. In my example, I will take a case study pertaining to an apparel sector. This apparel sector is having, let us say, 30 stores in India, and it is having one of the largest market share as far as the apparel industry is concerned. But this company also needs to sustain its success. It needs to keep on growing. So there are 2 important words over here, friends: sustaining and growing. If a company needs to sustain and grow, they cannot do it without having a very good business excellence model. Even before we go and learn what exactly is business excellence model, let us understand what exactly do we mean by the word excellence. Friends, excellence basically means at the end of the day, the customers have to be extremely happy. There is no business which has survived or which has become excellent without having a happy customer. Another important thing is today customers are happy doesn't make much difference. What makes a bigger difference is that today the customers are happy, tomorrow also the customers have to be happy. Only then will you be able to create this success for a very, very long span of time. Third part, and a very important part of any business, is innovation, creativity. You cannot keep doing the business in the same way how you have been doing for so many years. You have to come up with new and new models so that what you do, others do not do, and that is where you create your success. One of the best business excellence models for the apparel industry is called as EFQM. The full form is European Foundation Quality Model, as per which there are 4 results that you're looking at and 5 enablers. Enablers means things that we should be enabling to get this kind of results. The 4 results that you should look for is: 1, are the customers happy? 2, are the people in the society or are the people happy? 3, is your planet happy or is your entire society happy? 4, is your business happy? Is your business making money? These should be the four results that you should be looking at, and these are somewhere similar to the triple bottom line which we learned in another video. But friends, to achieve these four results, that's customer being happy, people being happy, society being happy, and business being happy, you need to have five very serious enablers. Point number one is leadership. Friends, whichever business you speak about, whichever sports you speak about, any successful model you speak about, you will never see a successful model without having a successful leader. Leadership lies at the bottom of any successful organization. I can even take it to the next extent of saying that every person in the company, if they start showing leadership, together they create such huge value that the entire company can grow to a very, very different extent. The second important thing is, after you have leadership, you should have a clear-cut strategy. You should have a clear-cut plan. Every contingency has to be looked upon. I will do this. If this doesn't work out, I will do this. If plan B doesn't work, I should do plan C. Basically, I should work so hard and I should create such a good strategy that there is no chance for me to fail whatsoever. Third important thing that we have to focus on is people. People in the organization, according to me, is the most important assets, because if you have a good team, if you have a positive team, a team of wonderful leaders, a team who can implement strategies wonderfully, a team who can sit together and create good strategy, then why will your organization not succeed? So basically, people are the ones who enable these four results that I mentioned about, which are customer, people, society, and business. Next important thing is resources. Resources can be the funds that the company require. It can be the connections that the company require, the support that the company require. Right kind of resources help many companies to grow drastically, along with good leadership, good strategy, and good people. And the last and the most important part is, to bring all these things together, our company should have an extremely good process. So someone has to study the process thoroughly, identify all the value-added activity, identify the non-value-added activities, remove the non-value-added activities, keep the value-added activities, make a good team, and then make sure the process continues forever. That is how your business can actually become one of the most excellent businesses in the world. I hope this video is clear to all of you friends. Thank you.
Friends, did you understand this video? All right, here what we have done is we have covered the whole video in a span of 5 minutes. But this, if you go through the textbook case study, it will be around 4 or 5 pages. And if you want to do it on your own, you need to make these short notes, etc. It will be difficult. So here, if you can learn it in 5 minutes, you get a leading advantage. Like that, we have majority videos are there in my YouTube channel. And what I will do is I'll upload these videos in the class videos also. So it will become easy for you to check these videos. All right. So let me just explain this once again. They're talking about an apparel sector. They have 30 stores, large market, good, they keep on growing. But then after one point of time, they want to grow with a sustainable model. That means I can become successful today. I should not fail tomorrow. I should grow consistently every year. So they say, one, existing people should be happy. Now tomorrow if you start up a CA firm, your existing clients should be happy, plus you should keep on getting new clients, sustain the existing business and keep on growing. That is how you will reach to a very, very great bigger level. All right. So now they say, in order to do this, we need to have a business excellence model in which the customers should be happy. Not only happy today, they should be happy in the future also. We should have a good innovation. We should have unique ways of closing these things. And one of the models that is there in your textbook is called as the EFQM model, or European Foundation Quality Model. As per this model, you should have 4 results that every company should get. Now tell me, results are they in your control? For example, you are a CA student. You want to pass the exam. That passing is what we call it as results. Are they fully in your control? No. But enablers are in your control. The effort is in your control. I hope you are clear with this part. Here they are looking at 4 results from every business. Result number 1, in the apparel industry, are the customers happy? Point number 2, are the people happy? Point number 3, is the environment happy? Point number 4 is the business making money. So profits is one condition. That should not be your only result. Whether the customers are happy is also very, very important, because then only you get future profits. Whether the people in the society are happy. You should not do something in which your neighbors or your company neighbors are finding it difficult. 4, is your environment happy? Are you polluting your environment? These 4 results you should always start generating for your company. All right. Next one is there are 5 types of enablers over here. First one is called as leadership. So if you want those 4 results, you should have very good leadership, especially you and everyone in your organization. 2, you should have very good strategy. 3, you should have very good people in the organization. 4, resources, basically money is required. Any business you do, you cannot do it without proper investments. And last one, you should have a very good process. Otherwise, your investment will become absolutely wasted. Are you all clear with this case study, friends? What I will do right now is I will take this case study and I will put it in the SCMPE batch. So if you just log in over here, I will add you to the batch. You will get all the content free of cost. All right. So here I will take videos. I will make a new folder called as case studies. Okay, it's already there. Case study. Add this folder. Inside this folder, I will put the first video, new video, and I'll paste the link over here. It is the business excellence model. All right. Now the video has come over here. You just have to come and click, and everything you will get it in an organized manner. Everybody clear with this part? Can I go to the next part of theory now? Now we come back over here and we learn the theory. For 4 results: people, customer, society, business. Are the people happy? Are the customers happy? Is the society happy? Is the business happy? What are the 5 enablers? Good people, good strategy, good resources, leadership, and process. Can you scribble down this in your books now? All right, friends, can I go to the next part now? Okay. So once we are done with business excellence model, next theory to learn is called as the theory of constraints, or it is called as the throughput accounting. I will explain to you how this works. Now let us assume in your company you are making 2 products. One, you are making masala dosa. 2, you are making onion dosa. All right. Let us assume the selling price of masala dosa is 50, onion dosa is, let us say, 70. Against this, they will take 2 types of variable cost. One is material and they will take other variable cost. Let us say that is 20 here and let us say that turns out to be 30 over here. Now, when you reduce selling price from variable cost, normally when we take variable cost, we take labor also. Here we will not take labor, only we will take the other variable cost and we get a contribution. That contribution is called as throughput contribution. So here how much do I get? I get the number as 30 and here I get the number as how much? 40. Are you all clear with this part? Alright. This is the throughput contribution. Now let us say how much time is taken. Let us assume we take around 10 minutes to make masala dosa and let us assume we are making around 20 minutes to make onion dosa. Okay. From this, I can find out my throughput contribution per minute. So tell me what is 30 divided by 10. Do I get the answer as 3 rupees per minute? And what is the answer you get over here? 40 by 20. The answer would be 2 rupees per minute. Or the logic is for every 1 minute I spend to make masala dosa, I get 3 rupees. And for every 1 minute I spend to make onion dosa, I get 2 rupees. So everyone tell me, friends, which is better? Masala dosa is better or onion dosa is better? Masala dosa is better. So when we give ranking over here, the ranking for masala dosa will be 1 and ranking for onion dosa will be 2. Can you please write down this in your books now, friends? Just a moment. Let me just do one small setting so I can show you the full screen. Okay. Fine, friends. Can you please write down this in your books now? Please give a heading throughput accounting, okay? Okay, Vijayalakshmi, you have a doubt why it's called throughput. I have absolutely no clue why it's called throughput. That person who named it, he called it as throughput. We will also call it as throughput. All right, friends, I believe you are all done writing this. Okay. I'll now go to the next part. All right. I believe the audio is clear to all of you, right? Yes. I'll go to the next part. There is one more ratio that you have to learn over here, which is called as the TA ratio. Here, what we do is we find out the factory cost per minute. So as I told you, compared to the normal marginal costing, here we treat labor as fixed. So we will take the labor cost. Let us assume my labor cost is turning out to be 1 lakh rupees. This is for one full month. Point number B, total time worked. Let us assume the total time worked is turning out to be 50,000 minutes. Therefore, how much is my factory cost per minute? Will I get the answer as 2 rupees per minute? Okay. I'll call this as factory cost per minute and then we will go to TA ratio. Can you write down this in your books, friends? Fine, friends. I believe you are all done writing this. I'll go to the next part now. Okay. Fine. Now, once you are done writing this also, now what I will do, I will show you the meaning of TA ratio. So particulars, you have masala dosa and then you have onion dosa. All right. So we already found out the throughput contribution per minute. How much was the throughput contribution per minute? 3 and 2. And what is the factory cost per minute that we found out? 2 rupees. Therefore, from these two things, I can go and find out the TA ratio. Do I get the answer as 1.5 over here? And do I get the answer as 1 over here? So what is 1.5? For every 1 rupee of factory cost, I have 1.5 of throughput contribution. So that is very good. Whereas here I have only 1 rupee. Am I right? So if you look at this, I would say masala dosa is better. And this ratio is what we call it as the throughput accounting ratio. Can you write down this also in your books? I believe you are done writing this, friends. Can I go to the next part now? Alright, let's go to the next part now. So we are done with this one particular part also. Theory wise, they call it as throughput. That is what we just did now. Throughput is the contribution part. Investment is the amount that you put. Operating expenses where labor and the other fixed costs will come into the picture. Alright. Throughput ratio, we learned the formula. Throughput contribution divided by factory cost per minute. That is also covered over here. Now friends, here they have a beautiful case study. I have actually experienced the same case study when I was working with one of the companies earlier. Friends, normally when you go to any company, they have one thing which is called as labor utilization. They say if we utilize labor maximum, automatically what will happen? You will end up getting maximum profit. This is a normal understanding that people are having. But friends, once a time when I just consulted one of the footwear manufacturing companies, they normally have, let us say, a turnover of 500 crore. They asked me this question that if I'm working at full capacity, how much turnover can we make? So I told if you're able to produce at full capacity, your turnover would be, let us say, 700 crore. Now what happened was they made their workers work left and right, morning and night, full capacity. They produced so much that they did not even have godowns where they could store this much amount of footwear, and they were forced to keep this footwear outside also because inside everything became completely full. Now the two problems what happened was, problem number one, they couldn't sell the entire output. So what happened, those footwear became outdated, dead stock. Second thing, lot of footwear they kept outside. The footwear what they kept outside, one day unfortunately in the month of March it started raining. The whole packaging became waste and they had to repack the whole thing. So friends, in this case study that you have in your textbook, they say that you should never produce more to absorb labor. Then idle stock will become a problem. The original problem is not producing more. What is the original problem? Selling and delivering this stock to the final buyer. So like that, they say that in throughput, rather than focusing on labor and labor utilization, we utilize labor thinking it's a variable cost. Don't do that. Labor is not variable cost, it is a committed cost. Don't stress too much on that. Focus on your sales rather than focusing on production. Can you scribble down this, friends? I go to the next part now. Next, we are going to learn something called as supply chain management. Friends, if you are talking about any company, let's say we are talking about a footwear company. Have you all heard about Bata? Or we can speak about Woodlands. How does this company operate? From the original point to the destination, that entire process is what we call it as supply chain management. So what happens over here? There will be a raw material supplier. This supplier will supply the raw material to the factory. What will happen in the factory? Raw material will become what? Finished goods. Then from here, they will be giving it to their stockist. Stockists are people who will just hold the stock with them to sell. From stockist, it will go to the wholesaler. From wholesaler, it will go to the retailer. And from retailer, finally, it will go to the customer. Friends, this entire process from the RM supplier to the customer is what you call it as supply chain management. Can you quickly draw this diagram in your books? All right, friends, I believe you are done. Can I go to the next one now? In supply chain, you have two types of model. One is called as a push model and the other one is called as a pull model. Push model, normally we have all durable goods coming under push model, like footwear, they will not get damaged very soon. Diamonds I have seen going under push model. I'll explain this with the help of an example. Pull model normally goes for non-durable products, and one of the best examples of this is Amazon, Flipkart. They have created a complete new trend where production is all based on the actual demand. Push model basically means, I will just show you, this is a classic example of push model. What happens over here, I'll explain to you friends. The supplier will push the stock to the factory fellow. He will tell, please take my stock. Factory fellow will say, sorry, I don't need your stock. He will tell, Arey, don't pay me money now. You keep the stock. Retailer will finally go and give it to the customer. So from here, it gets pushed to the stockist. From here to here to here, and finally from here to here. And this model is what we call it as the push model. All right. Now I will go to the next. Even cement industry comes under push model. Very true. Next one is called as the pull model. Pull model works in a different form. What happens here is customer will come on Amazon and he will place an order. Alright. Once he places an order on Amazon, Amazon will place directly the request to the company. Once company gets the request, what will the company do? It will place a request or it will produce. Okay. And after producing, what will they do? They will deliver to the customer. So in a pull model, based on customers' demand only you will produce, but in push model, first you will produce and then somehow you will try selling it. Are you clear with this part now, friends? Can you draw this diagram in your books? I believe you are done with this part also, friends. Can I go to the next one now? So here they say this is the entire process. Customer relationship you have to take care. Supplier you have to take care. Customer service, demand you have to manage. Order you have to fulfill. Manufacturing flow management, product development, returns management. Everything comes under what? Supply chain model. In that you are having two parts. One is a push model and the other one is a pull model. All right. See, we have given the picture also over here. This is how the push and the pull model actually works. Hold on. Okay. So in the push model, it goes, sorry, I think it's written wrongly over here. Correct. In the push model, ideally it should be from the supplier to the manufacturer, distributor, retailer, and customer. Pull is the other way. All right. Pull will be customer demanding and it's ultimately coming over here. All right. I'll go to the next slide now. There are two flows of supply chain. One is called as upstream and the other one is called as downstream. When you deal with the suppliers, it is called as upstream. So raw material supplier, etc. But when you talk to the customers, it is called as what? Downstream management. All right. Next. In this, you are having the following, this diagram, if you study, it will be more than enough. You have the following types of supply chain that happens in downstream. That is with the customer. One is called as relationship marketing. Other one is called as customer relationship management. IT to be used, brand strategy. We'll start one by one. We'll start with relationship marketing. All right. Here they have a 6 market model, or this basically is trying to answer a question. how you can get customers. Or I'll put it this way, since you're all into CA, how will you get clients in the future? Okay, tell me friends, how are the different ways you can get clients in the future? First market is called as the internal market. I'll explain each of these to you. Let me write down the names first. Second one is called as referral market. What is the third market told over here? Influence market. Fourth one is called as recruitment market. Fifth one is called as supplier market. And the last one is called as customer market. Okay. I'll start with internal market. Friends, many a times what happens is there are people working inside your company. For example, you may have an employee working in your company. That fellow's relative will need some kind of income tax filing. He is not capable of doing it, assume. Then what will happen? That file will come to you. That market is what we call it as internal market. What do you mean by referral market, friends? You do a very good work, one fellow will refer to you. Oh, that fellow, Tarun Jagdish, very good fellow. Go and you can go. He will give you advice. That market is called as what? Referral market. And according to me, this is the best market. Only if you are genuinely hardworking, you can succeed. Otherwise, you cannot succeed in this. Influence market. Let us assume my uncle is a GST officer. So many people go to the GST officer, he can refer, okay, you can go to him, he will solve your GST issue. Then what happens? That market is what you call it as the influence market. Recruitment market basically is the HR agencies. In CA firm, it is not very popular, but in many other places, if they need some kind of marketing consulting, you need a part-time marketing advisor, they can always go for outside companies and they can do it. Supplier market. Suppose I buy my computer for my office from a particular fellow. He can become my client. So then it will become a supplier market. Customer market, as I told, one customer happy, he will connect me with another customer. All right, can you write down this in your books now, friends? Yes, so now you have a doubt between referral and influence. Influence is something where a personality can influence you and he can take decisions. It need not be a referral. For example, my uncle is a GST officer. He has caught one fellow, Mr. X. He has told Mr. X that if you go to Tarun, your matter will be sorted out. Now he has an influence. It is not a referral. Referral means what? He says Tarun is good. You go to him, he will solve it, and the client is coming with choice. There is a difference between these two things. All right, friends. I think you are all done with this. Can I go to the next part now? Okay. So these are the 6 market models. Then you have customer account profitability. Friends, customer account profitability basically means it's a scenario where suppose I'm having 10 clients. Out of these 10 clients, mainly 3 clients may be contributing to my major profits. Remaining 7 clients may not be doing that. Alright. So for this, we have to find out how much profit I'm getting from each client, or the logic is how much profit each client pays me. That can be done using activity based costing, and that is what I took in the last week, friends. You learned in the chapter of strategic analysis, we learned the 4 steps: cost pool, cost driver, ABC rate, and apportion rate. Yes, we know the recordings will be available. Yes, it's in YouTube, right? The video will be available here. All right, friends, I believe you are all done with this part. Can I go to the next one now? Customer lifetime value would be, I will explain that to you. Suppose I am having 2 clients. Okay. One big shot fellow who is giving me one service for a value of 1 lakh. Another small client who is paying me 5,000 per month, but he is going to pay me this forever, or at least for the next 10 years. Tell me, which client should I give more importance? I would say small client. Why? Because I'm going to get my lifetime value of this client is much bigger. This one only it's a one-time service. Are you clear with this part? This is what you call it as customer lifetime value. Yes, Vinod, we cover the whole study material over here. It's fully from study material itself, not from anywhere else. Okay, I believe you are all clear with this part also. So that's what we are done with relationship. We are done with customer relationship management. Use of IT basically means we should use computers. Everything has changed. Technology has changed. You also change with technology. Brand strategy basically means you are supposed to do your own branding. Friends, all successful companies are having one or the other form of branding. For example, Maggie noodles. Friends, the moment you hear about Maggie noodles, what comes to your mind? 2 minutes. So you get an impression, I can make Maggie noodles in 2 minutes. One beautiful thing. But friends, the interesting fact is there was one fellow who filed a case against Maggie noodles. He filed a case telling that I cannot make Maggie noodles in 2 minutes. Such jobless people are there, my dear friends. Another one popular thing is Axe deodorant. Have you heard of this? I believe you must have heard. I'm not sure how popular it is now. A few years back, this was very much popular. The ad how they ran was the moment you put eggs, all right, some fellow, is putting a deodorant on him, and you'll see the girls coming and suddenly surrounding him. One fellow actually went and filed a case after using eggs deodorant. Girls are not coming behind me. My dear friends, that's how they do branding. But Swapna, ideally, Maggie won the case because their calculation was the 2 minutes is the exact time after you put the noodles inside a boiling hot water. Alright, friends, I believe you are done with this part. So, we are done with downstream supply chain management. Customer account profitability, we will use the 5 steps. That is basically nothing but activity based costing. First, split the customer into different segments. Take the revenue, take the cost. This is done using activity based costing. Done using activity based costing. Identify and retain good quality customers and try removing the unprofitable ones or re-engineer. This can be done using activity based costing. You should bath before applying deodorant. Good tips, Swapna. I believe everyone is done with this. Okay, we are to the end, we are to the last part of this, friends. Now we'll teach you something called as service level agreement, gain sharing arrangement, and outsourcing. That's it. And with that, this chapter is over. SLA, gain sharing arrangement, and what is the last one? Outsourcing. SLA is nothing but service level agreement. Friends, this is nothing but a contract before, it's a contract before we start a particular service. I'm not sure how many of you have seen, normally when I take up any assignments, we sign an NDA, non-disclosure agreement, which says that, I will not be disclosing any of the details outside and we'll be providing this kind of service. That is what you call it as NDA or a non-disclosure agreement. That's one example of what SLA or service level agreement. Everybody clear, friends? Next one is called as gain sharing arrangement. What is meant by the gain sharing arrangement is, suppose you are A, you associate with B, and let us assume, I'll give an example, suppose we are applying for a government grant. So A tells to B, look, we want to apply for a government grant. I cannot do it alone. I can do it only with the help of one other person. So you apply for a government grant. If I get 1 crore grant, I will share with you 25 lakhs. This is a classic arrangement of gain sharing. So here what happens is, only if benefit comes to A will give to B. Otherwise, A will never give to B. Are you all clear with this part? Same way, the next thing is called as outsourcing. Outsourcing, you already know. I am a CA. I need to get an audit done. My staffs are all held up. So I can subcontract to another CA. This arrangement is what we call it as outsourcing. Are you all clear with this part now? Can you scribble down this in your books? Yes, we have a case study here, Swapna. I will share that after this. Done, friends. Now we have a case study to be discussed. So I'm exiting this. I will take that case study of Raya Healthcare. Gain sharing.
Hello everyone, this is Tarun Jagdish. Now in this video, we will learn a wonderful case study which happens to fall for the hospital industry and which is having a term called as gain sharing arrangement. Friends, let us assume the name of this hospital is Raya Healthcare. This hospital is having a capacity of 450 beds per day. So basically they are doing very good services to all the patients who are getting admitted over there. But this hospital is having one serious weakness. They are still using all the traditional methods for doing the CT scan or for doing the MRI scans. Because of this, once a CT scan is conducted, the patients have to actually wait for more than 4 weeks to get their reports, and this is creating a lot of frustration. This is also affecting the goodwill of the company. Friends, it's not that easy to purchase new, latest, updated CT scan machines because the technology has changed. First of all, the machines are very, very expensive. On top of that, even we need skilled persons to know how to operate these machines. At this point of time, Raya is not in a position to invest that kind of a money on CT scan or MRI. Friends, that is when they came across another company called as Live Life, who are into outsourcing business. They have the latest machinery, they have the latest technology with which they can provide the reports to the patients very, very quickly. So in that case, what Raya Healthcare did right now was they entered into a tie-up with Live Life so that Live Life will take care of all the headache pertaining to CT scan, all the headaches which is pertaining to MRI based services. And because of this, the customers will be happy and there will be some kind of a cost savings. Now, we need to create a win-win deal between Raya and Live Life. For which purpose, what they will do is, they will make an agreement in which the first year, whatever be the cost savings, entire cost savings will be taken over by Live Life because they are investing some money to get this done. Year 2 and year 3, what they will do is they will share the benefits in the ratio of 30-70. 30 for Raya, 70 for Live Life. Fourth year, whatever benefit comes, let the entire benefit be taken by Raya because by now things are almost settled down. This kind of an arrangement is what we call it as a gain sharing arrangement. Friends, in real life, we cannot be a specialist in everything. We need a good team together who can help us to do it, and gain sharing agreement is one of the models in which we can associate. The biggest risk of a gain sharing agreement is that there is no guarantee that you will be receiving any payment. There is always a chance that there are no cost benefits, hence there will be a loss. So this loss will be suffered not only by Raya Healthcare, it will also be suffered by Live Life. Even though there is huge risk involved, many people still enter into gain sharing arrangements mainly because of many non-financial benefits. One of the biggest non-financial benefits is the market goodwill. If a patient comes to my hospital, they are getting excellent service. Next time that patient will not go anywhere. He will only come back to our hospital, plus he will refer to others also. So in this case, if we are not able to provide MRI scan, patient gets disappointed. And once he is disappointed, he will end up going somewhere else and it will affect the market value or the worth of this hospital. But this is something what we cannot exactly measure, and that is why we call it as a non-financial benefit. So friends, if you want to enter into a gain sharing agreement, first thing, have this in mind, win-win. You should win, the other person should also win. If you go for win-lose, you win, the other fellow lose, it will not survive. Lose-win will not survive. Lose-lose also will not survive. Just be very transparent when you're keeping terms with the other party. Be very clear and ensure win-win. In the long run, you will also win and the other one is also win. This is one of the cases where practically hospitals are entering into gain sharing arrangements like this. There can be many other areas where you can yourself.
Friends, I believe you are clear. So basically, it's two hospitals are there. Raya is having good capacity, excellent service, but the problem what they are facing is MRI scanning machines are very expensive. All right, and they need some highly skilled workers and a lot of investment. They don't have that money. They don't have the skilled worker. So they give it to another company called as Live Life. Advantage what they get is that people coming to their hospital will never say that this hospital doesn't have a good MRI scanning machine. And Live Life, what they will do, they will be able to get a latest technology machinery. They'll generate report quickly, and customers will become very happy. So as a gain sharing, whatever benefit that they are making, first year full Live Life will take, second year 70% Live Life will take, and the last year Raya will start taking. So it's a proper win-win deal, but you have to be sure that you do it properly, and you should be very transparent about this deal also. So I believe, friends, you're all clear with this part. With this one thing, we are done with the theory part of this chapter, friends. Now what I will do is, I will take the study material and I'll show you. Okay, I'm here itself. I'll show you the important questions that you need to work out. Friends, ideally, if you work out the textbook problems 100%, exam-wise, you should be able to score good in the problem sector. All right. Let me go and tell you which are the good questions to be worked out. One is a very easy problem. One reading is enough. It's about banking on total quality management. Let me see. P. Question on cost of good quality, cost of bad quality. Very easy question. You can do this once. Okay. One day before the exam, not required. You can do it before that. 3 is a very good question. Mark it as important. All right. It was there in the old syllabus also. Now it's come in the new syllabus also. 4 also very good question. A different type of question. One day before the exam. All right. 5 is again total quality. You can work it out once on the day of exam. Not required. Cool air. Very good question. Do it one day before the exam. Okay. 7 theory of constraints. Do it one day before the exam. 8 is actually an examination question. You can work it out. It's similar to question number 7. Once you do 7, 8 will be manageable. It will not be very difficult. But 8 is also a very good question. Work it out once. So friends, once you do this and the theory that I gave you, you are done 100% with this chapter. And once you go to the examination hall, this will come for at least 6 to 8 marks. So in this 1 hour, you can score that extra 8 marks. So Give it a priority and study this chapter. I'll pack up with this part, friends. If you have any other doubts anytime, you can always WhatsApp me. I'll share my number with you. If you need any guidance of how to study or what are the free contents required, important for you, all that I will message you and I'll let you know. Thank you so much, friends. Have a lovely time ahead. Take care. Yes, Vinod, I'm doing it every Friday. You just subscribe to the Class Plus app. I think once you view this video, you will understand. It's every Friday, 6:30 p.m. I do this. All right. Thank you.